And now shifting focus, investors seeking to invest in precious metals are increasingly turning to silver rather than gold, as silver prices have surged at a faster pace and offered higher returns. Over the past 9 months, the price of silver has doubled, rising at roughly twice the speed of gold. Take a look at this report.
In recent days, silver has stolen the spotlight. What started as a steady climb has turned into a sprint, and consumers are feeling it. In global markets, silver has surged roughly 56% on year, and in just the past month, prices have jumped nearly 16%. In India, the domestic silver market has mirrored the rally, and in some cases also exceeded it. The per kilogram rate has crossed 1,63,000 rupees in many cities, a massive 90% jump this year and a more than 30% jump in just a month. So, big gains and fast. This is happening just as India heads into its festive season. With Diwali around the corner, many households and retailers are turning to silver for gifting, puja, small tokens, souvenirs, even as cheaper luxury compared to gold. The fear is, buy now or miss out. But there's a twist. Mutual funds that run silver exchange traded ETFs are now pulling the brakes. Several have stopped accepting fresh lump sum and switch in subscriptions into Silver ETF fund or funds. Their reason? A shortage of physical silver in India and steep premiums in the domestic market. The scarcity means ETF houses cannot efficiently convert investor inflows into physical metal, the core requirement of a bullion ETF. Here's what's happening at the ground level. As demand runs ahead of supply, silver is trading at premiums of 10 to 18% above international prices. Normally, this premium would be around 0.5%. Many dealers and jewelers have slowed or even stopped fresh orders. Some report wait times of 4 to 7 days for delivery, with spot premiums of 2 to 3,000 rupees per kg in local markets.
This is actual supply tightness in the metal, but yes, some speculative buying is there right now. And what is happening is more exciting that now the physical silver, it is $3 premium as compared to the future silver. It is not happening in normal circumstances. So this is supply tightness in silver, and this is the war between buying between physical silver and digital silver.
Kotak Mutual Fund has suspended new inflows, citing a domestic supply squeeze which is inflating premiums. UTI Asset Management has halted new investments in its UTI Silver ETF fund of funds, explicitly pointing to a shortage of physical silver. Even SBI has joined in, pausing fresh lump sum subscriptions in its SBI Silver ETF fund of funds, citing lack of physical silver to back new units. Gold too is under pressure, though not as acutely in terms of supply. Gold prices have hit more than 40 record highs this year. The rally in both metals has been fed by global uncertainty, weak dollar expectations, and investor demand for safe assets. For a consumer, someone who buys silver coins or small silver items as gift or for future safety, this is a tricky moment.
Investor, they should wait to get normalize this situation. After that, they can get into the silver SIP ETF. And yes, after 2-3 months, we can see that, the situation should get normalized.
What has added to the surge in demand for silver is the decision by the United States in August to add it to the list of critical materials. This was in part due to it being viewed as just more than a precious metal. As its demand surges across renewable energy, electronics, artificial intelligence, and defense applications. It has also joined gold as a choice of reserve for many central banks. Meanwhile, in the glow of festive lights, silver finds itself in a rare squeeze. And for buyers and small investors, caution matters more than haste. Bureau Report, Business Today Television.